Hello everyone. As always, the entire world is obsessed with silver breaking out. Okay, every analyst from whether it is from US, Europe, all over the world, they are calling it a breakout of 40 years. And a lot of people are projecting a target of 90, and some are even projecting an outrageous target of 400, 600, 700, 900. Yes, silver sometime in future it will go there. Okay, but has it crossed all resistances? We first have to identify that, right? So let me ask you a question. This is the horizontal resistance that everybody is talking about. Okay, so according to them, the silver has broken out above this 48 zone and sustained for one full month. Fair enough. Okay, now let's look at it in two ways. What happened in 2011? 2011 silver made a high of 49.8, which is approximately $50. Okay, but that was not considered as a breakout because it crashed immediately, right? But now a lot of people assume that silver has sustained both these levels significantly higher for one full month. Okay, now let's see whether all the resistance have been crossed or not. Let me ask you a very simple question. If somebody is driving a vehicle on a highway and unfortunately there is a big truck coming on the opposite side and it hits the person head on, right? So a head to head collision is obviously called as an accident. But what if the same truck hits the same car from the side? Will you call it as an accident or no? So obviously that's also an accident, right? So if you don't care about from which angle you are getting hit during an accident, shouldn't the same rule apply for resistance as well? In the name of simplicity, we just cannot draw only a multi-year cup and handle and show there is an horizontal line resistance as a breakout, which is like escaping the truck which is coming head on. Okay, there's a head-to-head collision which you escaped and it's broke out, it's fine, right? But do we have any other angular resistances that are there? How will we look at it? We'll have first to draw those patterns, right? Without drawing those angular resistances, how can you make a determination saying that breakout has been successful yet? Then why was there such a huge wick in 2011? Is this because this resistance hit? No. If this resistance hit, this need not have to crash down below here. Okay, it could have ended right above at this stage and it could have continued sideways and then followed a breakout. The reason why the price went all the way from top to bottom, you'll have to find the answer. At Stocks and Trends, we follow only two very simple rules. Simple, reliable, repeatable, scalable rules. Rule number one, without a support or a resistance, the price never ever reverses. That means whether it is a candle ending or a wick ending, for both of that, there has to be a resistance. The wick would be as long as the next resistance between the candle and the wick. Okay, if the wick is small, that means there are back-to-back resistances. If the wick is long, that means the resistance, there is one resistance ending here and another resistance ending here. So the price temporarily goes all the way up, takes the second resistance, comes all the way down and stays below the first resistance. That is the meaning of a long wick. Okay, now what I'm going to do here is I'm going to use replay mode and first go into a 6 months pattern. Why do I choose 6 months pattern? Because when we draw multi-decade patterns, we need to clearly see every candle and every wick separately. We don't want to draw it in a monthly and then zoom it down, and then this is not an FM radio signal, guys. We need to analyze where the candle is, where the wick is. For that, those have to be visible clearly to the naked eye. To do that, you need to draw a support or resistance which is as good as that. Okay, so I choose a 6 months time frame where we can see the multi-year cup and handle pattern very clearly. Okay, now let's try to draw support and resistance. So I'm choosing parallel channel. I'm connecting the supports between here. Okay, and I drag the channel to this point. Now, what do you see here? A wick that was formed in the year 1983. I don't even know how many of you even born in 1983. Okay, but jokes aside. So wick that was formed in 1983, it comes and hits the price bang on 2011, July 2011. Okay, fine. So we have addressed the resistance which killed this particular wick. Okay, now we need to find out why what is the other resistance which made sure the candle does not cross this level. Though from a 1980 perspective, the all-time high resistance is here and the next resistance is here, which is 37.5. So 37.5 and 48, but the candle ended much below. Okay, and if you look at what did this resistance do, you can see the subsequent wick going all the way till 37.75 and crashing right beneath. So this is also a perfectly valid resistance, no doubt about it. Okay, but for now we are not trying to identify why this wick hit. We are trying to identify why this particular candle ended right here around 34.5, right? So to identify that, we don't have a straight line horizontal resistance that cut across 34.5 in history. So we remove this and we find out an additional pattern. So I start from the same point on the lower side and I end my parallel channel right on the top of this green candle and the red candle between 1983, and voila, what do you see? The same angle has caused these green and red candle also to crash down. So this answers why this inner pink channel, it answers why the candle ended here and then fell below. And the outer pink channel answers why the wick went all the way up here and then ended here. And this resistance of 48, it answers why this particular candle went all the way up here and then it started crashing down, right? So the first hit was this 48, fine. Then from 48, when the price was taking a hit and it was falling down, the second parallel channel pushed it further down. The first parallel channel, I mean the outermost. So when the outermost channel pushed the price further down, the third channel, the innermost channel, it killed it here on the candle side and the price ended here. Now let's talk about one more channel. I will draw connecting these points here. Now if I mark this separate color, so now you see for this cup why this handle took a reversal from here, right? Now let's do it. Let's remove everything. Let's do a replay. Okay, so I'm going to 2011. So now all I have is this and this. So I'm going to predict the future right in front of your eyes. Okay, I'm not recreating the past from an existing set of candles, but I'm trying to predict the future from the candles which are yet to form. So this is how I'm drawing the two concentric parallel channels. Okay. Now I draw the third channel connecting the points here with here. So I chose to connect the low here with the wick formation here, connect it to the wick here. Okay, this is what I choose. So this is properly addressing, or this is properly meeting the guidelines for a support or resistance. And as you can see, the same thing, you can see the reversals happening here all the way back in, I don't even know, 1915. It's 1915. Okay, more than a century ago. It's 1915. This parallel channel bottom, it created a support when the price was falling down. It touched the support, it went up, it took the yellow channel resistance, it came down again, it formed a support. The price was going sideways like this, and then it crashed underneath. Okay, and again when it went up, come here, we see a support here, support taken, the price bounced here, and then it went up, it came down, took a support here, and price bounced. Now this is the replay. So from, we are in 2011 now. Okay, now let's play how the future is going to continue from here. So as you can see here, the next semi-annual, okay, 6 months candle, it started its journey here, it went all the way up, took hit from the outer parallel channel, and came all the way down, took hit of the inner parallel channel, and the inner parallel channel also pushed. So two resistances acted on it. It pushed the price down and it stayed here. The third semi-annual candle starts from here. It went all the way up, took the first resistance from the 1980 peak of the candle, which is 37.75, took a hit, and then when it came down, this yellow channel pushed it further down, so it ended up here. So there has been so many attempts here. That means each candle is 6 months, so many years of struggle. So half a year, 1 year, 1.5 years, 2 years. So 2 years ka struggle is happening around these channels. Okay, the price came down, took the support of this inner channel in the pink channel, and there is a small bounce going on. So if there is a struggle around, okay, even if it is a short-term struggle around a particular level, that's qualified as a support. Okay, but it was not able to break it. The main reason is when you have a rounding bottom failure, that becomes a cup and then a handle is getting formed. The handle cannot be short like this. Okay, you need to have an appropriate and proportional handle. Let's take an example. If you have a beer jug, the handle of the beer jug must be large enough to hold the big jug, obviously, right? If you have a coffee mug, the handle will be small. You cannot fit the size of the handle of the beer jug into a coffee mug. Neither you can take the handle of the coffee mug and fit it to the size of the beer jug, right? So every correction has to be appropriate and proportional to the prior rally. This is rule number 2. What is rule number 1? Without a support or resistance, price never ever takes a U-turn. And this is why here when there was an U-turn attempt, it could not sustain because there is no support around here for the price to take a U-turn. So the price is falling further down. Okay, and it will take a proper support and then the U-turn will happen. And when such thing happens, the size of the cup and the size of the handle will be appropriate and proportional. If it is not appropriate and proportional still, then the handle will not break out and it will continue as a VCP, volatility contraction pattern. Now let's look at how things are progressing here. So far we started our journey in 2011 and now we are in 2018. 7 years has passed. Our predictions are perfectly going on. So here we have a parallel channel breakdown or a break in. So the support is broken down, retested, and it's falling more. So this is called breakdown, retest, and crash. And then there is a small bounce, but this is not from a proper support, and hence this is not able to sustain. It is again crashing down to now kiss the support of this pink channel right here in 2018. So this is where the stabilization would start. As you can see, one one semi-annual, the price bounced, but it was not enough. The second semi-annual as well, the price formed tried to bounce, but it was not enough, so it formed a doji. And now we are in the third semi-annual. That means 1.5 years passed after touching this bottom of the pink channel, and the price is trying to stabilize here. And wow, as you can see, a big breakdown during 2020 COVID. Remember, we drew this channel in 2011, and 9 years later, even the COVID crash could not penetrate this parallel channel. It came all the way down, but the channel pushed it up. That means the support is perfectly active. And you can see the struggle on the top side as a resistance. First semi-annual could not pass through. The second semi-annual is still struggling, and the price is crashing. We are in 2022 right now, 2021. So as you can see, despite all global and macroeconomic factors, the price is following a simple supply demand channel that was drawn 10 years ago, a full decade ago. We are in 2011, we drew the channel in 2011. Sorry, we are in 2021, whereas we drew the channel in 2011. Now the base of the handle is getting formed in such a way that it is as close to be appropriate and proportional to the size of the cup. Okay, so it's going sideways now, but everything, whatever is happening within the boundary of the diagram that we drew in 2011. Now I think we can fast forward it and come to an end to see where the price is ending. Okay, so I am going to terminate this replay mode. So this is where we are. We have terminated the replay mode. The last candle is getting formed now. So this is where you guys are calling this as a breakout. Okay, but where is the price now? The price is precisely at the level of the resistance where it was in 1983, which killed the candle down here. And now the candle is staying up here. And when I convert into weekly, you can see a wick getting formed precisely from this level that was drawn how many years ago? 14 years ago or 15 years ago in 2011. We are in almost in 2016, 2026. So that means almost we are 15 years later, and you can see the candle forming a wick. And if you put it in daily mode, you can see the red candle forming today. Okay, on a weekly, we can see precisely on the angle is hitting, taking resistance from the inner yellow channel. Okay, and this is why, despite every analyst calling this as a breakout, I don't call this as a breakout yet, because the pattern is on a semi-annual pattern. This is 6 months chart. We are not drawing a monthly chart to say, oh, is breakout done. For a 6-month chart, the breakout has to happen above this yellow parallel channel and sustain for one full quarter. If your drawing is in monthly, you need to have a weekly or a fortnightly breakout, meaning the price has to break out and sustain for at least 2 full weeks on a monthly pattern to be considered as a valid breakout. Otherwise, you can see a huge wick getting formed. Okay, a huge wick can form and the price can end below. And this can take one full year. If you can see, this is first 6 months, the second 6 months. So when the price tested 48.75 in 2011 and it crashed the same 6 months, this is Jan. So Jan to June, 6 months, the price crashed and ended here. The July cycle started here, went up all the way till 43.5, and then it crashed further down. So by 2011 end, which is that the entire drama took place for one full year. So it's not a one-day crash. It takes a lot of time because it's a huge long-term structure. Okay, so when you have a long-term structure, please learn to respect that. We should not be drawing only horizontal lines and say this is the resistance that I'm talking about. These are not the only resistances. There are resistances coming at an angular perspective as well, and we need to respect those. Okay, and the price is right now exactly at the resistance. There is no clear breakout yet, and the breakout has to sustain for one full quarter. That means until March 2026 end, if the price is not above 65 decisively, it cannot be considered as a breakout. The price can fall any time below this channel of 47. It can go further down, which is what I expect exactly as a this is a cup and handle, and now this is going to extend as a VCP, volatility contraction pattern, and the third attempt will take the price all the way up to 95. So yes, you will get your 90-95, but not now. It's going to be another decade. There is going to be another U-turn that's going to form, and you will have to wait for that U-turn to complete. Okay, I hope you enjoy the show. Thanks for your time.